Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Okay, traders, once again, another video tonight. We're filming this video on the 16th, Thursday evening, for trading on Friday, April 17th. Traders, what did we learn so far this week? What I thought I would do in the beginning of this video with you, because I am traveling over the weekend and don't know that I'll get a weekend webinar done, I thought we would review what we have learned this week, traders. We've learned many things, but two techniques really stuck out this week that allowed us to basically sell the highs and buy the lows on two different days. On the down day, when we used the technique expecting the market to go lower, we were able to sell the highs and drop and get out. Then on the very next day, we used a second technique looking for the upside. We were able to buy the lows and ride it all the way up and get out. What were those techniques, traders? Just a couple of nights ago, I showed you flat tops. Let's review. Flat tops produce market drops. I put a chart before your eyes, and I showed you that we had a flat top. And in that very same chart, I showed you two other flat tops in previous history, and the market dropped right after the flat top was in. Well, we decided to take that as a short, and what did the market do, traders? It came right down and gave us a big down day. In fact, we had two down days in a row in most of the indices. That brings us to the second technique that we learned together this week that worked very well, traders. And what was that? The second technique was buy two down days in a bullish channel. What is the conclusion of what we learned this week? From what I can see, the conclusion was exactly this. Formations take precedence over technical indicators, because the day we opted to go short, indicators were bullish and we took the formation over the indicators. The market did drop and it was the right move. Yesterday, when we talked about the two down days we were expecting before the turnaround back to the upside, once again, technical indicators this time, in this case, were very bearish, pointing down. And I said, once again, we will enact the rule that formations take precedent over indicators. And what we did was we went long. Turned out that's exactly what happened, traders. We had our second down day. The market turned around and blasted off for us on Thursday. We were able to catch that. So again, two very important techniques. See a flat top, sell a flat top. Flat tops produce market drops. And when you are in some form of a bullish channel and you get a market that goes up, 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 and has two big down days, you buy that third day and usually you get a rally. So buy two down days in a bullish channel. Traders, that same technique will work for you in a bearish market. If you have the opposite of this, and let's say you have a channel going down, if you get down, down, down in two big up days, you sell the second or the third day after the second up day, and down you usually will go. We chose to use buy two down days in a bullish channel yesterday, and it worked quite well. So, technical analysis, baby. You can't ask for more, right? You gotta love it, traders. What else do we got going on here? What we have is the nice follow-through rally on Thursday and a green Omni in the S&P for tomorrow. Traders, I have at my site, I have a trade set up in the S&P. Another chart that we were looking at is soybeans. In the soybeans, we mentioned a few days back, actually a couple of weeks ago, and then a few days ago, soybeans looks quite bullish here, and soybeans have been going up ever since. We also have a trade for you set up on our site in soybeans, so please go look. It's www.livewithoscar.com. Now, being that I don't think I can get to a weekend webinar this weekend, you know in my weekend webinars, I like to keep the larger picture in focus for us. During the days or during the week, we jump in and jump out like we did. We sell a flat top, we only buy a 2-day down in a bull. We do stuff like that. We flip during the week where we're going to buy, where we're going to sell. But on the weekends, I slow things down a bit. I take a bird's eye view, and I usually present you with some evidence where the market may be going over the next few weeks. With that in mind, traders, I'm going to show you two really interesting charts. We are going to back off the dailies and look at weekly charts here in this chart segment. Traders, let's go look at the charts. Okay, traders, the first chart I'm going to show you is a weekly chart of the ES or the S&P. Each green line that you see represents a whole week's worth of trading. Okay, what I will say about a weekly chart is that if you have penetration of an indicator like a moving average, or if you have stochastics turning up, or if you have your DMI pointing down, when you get signals in weekly charts, they are much greater, or I should say, you should put much greater weight on those signals than you would a daily chart. In other words, if you take out a trend line on a weekly chart, the likelihood is you are going to move in the direction of the broken out line. So there's a lot of weight that goes with a weekly chart over a daily chart. With that in mind, traders, you are looking at the weekly chart of the ES, and here is what I'm finding very, very interesting. One, we have a proprietary average I have not shown to the Omni Trading Academy before. It's one that I use on weekly charts, and the market does not usually get above it, and if it does, you get a fat rally out of it. This might look small, but it's almost a 100 full point rally. Okay. Then we get back under that average. We stay under it all the way until now. We just got back above it. What else is in this chart? As you can see right here with this trend line that I have drawn in and I'm highlighting right now in black, we hit the market, rallied up and hit it, came back down, rallied up and hit it again, came back down, rallied up and hit it a third time, got above this average I'm telling you about, and now is above the resistance line. That, my friends, is called a breakout. On a weekly chart, you get above a major resistance line, and you have a breakout coming your way. What else is happening here? We are in this really neatly defined channel that's going straight up on this weekly chart, and we just bounced off the bottom of the channel, got above the major resistance, and got above the Omni average, which is slightly different from our usual one. And it looks like it's going to rally up here, traders. That would be a very handsome rally, to say the least. So what I have to say about what you're looking at right here is this. This is a very constructive looking weekly chart of the S&P, in my opinion. The dailies I've been showing you all week have become more and more constructive, especially that the NASDAQ is well above that triple top. Well, now almost all of the indices I follow are above the Omni's proprietary moving average. Now we go out to a weekly chart, and on the weekly chart, we're getting above one of our Omni averages, getting above the resistance, staying within the confines of a channel. You have to think that's bullish here, traders. Let's go look at one more chart now. Okay, traders, the next chart I am about to show you is the soybeans. It's the July contract, and it is a weekly chart. Unlike the dailies I show you, which flip from buy to sell every other day, this is a weekly chart. And first thing you'll notice, traders, look at the major resistance that has been broken out of, traders. Major resistance, major resistance. On a weekly, you get above a resistance line like this, you have a market coming. We're above the line. We're all the way up to here right now, traders. We broke out above the line, and here we are. What else is going on here? We are in a very nice channel. Once again, another market sitting in a channel. We have hit top, bottom, and we are on our way to the top of that channel right now. What is sitting at the top of that channel? The Omni's proprietary moving average comes in right at the top of the channel, and I think that's the target for soybeans. Traders, you're looking at the possibility of the 1120 11:30 area in soybeans if the bulls come out. And it looks to me like they're going to. We have been telling you about the beans all week. We've been really telling you about the beans since we started our fundamental shift videos back with using the CRB index. We showed you the beans were the first ones above the Omni average on the daily and were taking off. Well, now they're beginning to go threaten the Omni average on the weekly. You get above that, traders, and forget about it. You'll be selling the farm to buy this market. But for now, we are day traders. We will take what we see. I like the soybean market. I would be absolutely buying pullbacks in soybeans if I get the opportunity. Do your own homework, traders. Pull out your weekly charts and see if you don't see the same thing I'm looking at. One last thing on this chart is, if you take the top of this resistance and you meet it with the bottom of this channel, you have an apex right here, and we're breaking out of that apex right now. Very, very constructive looking charts, traders. Do your homework. So, traders, you see those charts? I mean, do you not get excited when you see something like that? Those techniques that we use this week, being able to buy dead lows and sell dead highs based on technical analysis. I mean, one more round of applause. How do you not love this stuff? You gotta love technical analysis, traders. Okay. Remember now, I just showed you some longer-term looks, a longer-term view, we should call it, in the soybeans. And I gotta say, this S&P, you know, we took Don't Fall in Love with the Upside off the board a couple of weeks ago. We've been very careful buying it when we can, but it has been continually going up. What else can you say? Now, with that weekly chart I just showed you, traders, that's very constructive. What will happen? No one knows for sure, but using analysis like that tells me that this market still has higher to go. Whatever phase of a rally we're getting in the S&P, whether it's the bottom or just a bottom for now before the next big down leg, you can't fight it, traders. Do your homework. Trade what you see, not what you hope for, because that's certainly what I do, and you see the results when you come on down to our academy and trade with us. All right, traders. We have the Mandalay Bay. I mention this in every video, and I will every video until we get there. The Mandalay Bay, we're doing a trade show in Vegas, baby. I can't wait. We got a booth set up. We'll be running our live show right from the booth on the floor in the Mandalay Bay. The trade show is May 11th through 14th. Traders, book your tickets. Come on down to Vegas and make sure you meet us. I will be there to meet all of my Omniacs, and I've said this before. I am doing this show, and in my mind, I'm doing this show so I could meet all of you. I basically don't really care about doing trade shows. They are fun. We get to meet lots of people. But I'm doing this so I can hang out with my Omniacs. So make sure you all come down and join us in Vegas, baby. Vegas is going to be great. All right. I'm out of here. I'm going to New York. I'll be working from my New York office all next week. Traders, everything is as it always is every day. My New York office is fully equipped. It's manned. It's got all the equipment in it that you need. Computers, lights, you name it. Satellite dishes. I'm going to rock and roll from my New York office. So I will see you there. Videos will come out of New York as always. As always, everything is all systems go. Traders, these markets are giving us a lot of great opportunities. Make sure you stay in tune with the markets. Always place stops, because with the volatility we're seeing, if you don't place stops, you'll be going like this. So make sure you got your stops in. All right, traders, that's about all I'm going to do in this video. Give me a call anytime, day or night, 702-629-4755. You know, one thing I don't usually mention in the videos, every now and then I throw it out there. Traders, I am a broker. If you'd like to open up your trading account with me personally and work with me via telephone, through the internet, and work with me so I can help you learn the techniques like we show you here on the board, and better than that, learn the mentality it takes to get through these trades. Because let me tell you, it doesn't matter how much analysis you know, if you don't have the proper mentality to implement the trades, to stick to your plan, to know when to get out and do it again every day, doesn't matter how much you know, you'll never get it right. I will help you with that. We teach mentality every day, the proper mentality, the proper mindset that you need to be a professional trader. So come on down and take a piece of that, traders. Most of what we do on our site is geared to help each and every one of you become better at this. So if you want me to be a personal mentor and broker, you come on down to my site. You can fill out the forms live right there on the site and shoot them through, and I will work with you. Okay, traders, we'll see you soon. I'll see you in the chat rooms. Make sure you have a great day tomorrow. Always keep a smile on your face because it helps when you're trading. And say the Steve says every morning, every afternoon, every evening, because it'll help keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.